Major stock indices faced a turbulent trading session on Thursday, with the Dow, S&P 500, and Nasdaq all closing down. However, the real drama played out in individual stocks like NVIDIA, Tesla, Faraday Future, and others that saw eye-popping swings. A key semiconductor company inked a strategic Taiwan supply chain partnership, cementing its dominance in an emerging technology space. An electric vehicle maker battled external headwinds despite developments on key industry issues. Meanwhile, a more speculative electric vehicle firm defied gravity, skyrocketing over 100% in a single day. Wild trading fueled by social media buzz. According to one technical analyst, this volatility highlights the market broadening beyond mega-cap tech stocks. A shifting composition opens opportunities in medium-sized companies as well. One beaten-down AI leader seems poised for a rebound given its next-gen processors, upcoming earnings beat, and bullish analyst ratings. Temporary weakness could offer an entry point. In short, today's roller coaster action provided lessons on technological innovation, social media's impact, and evolving market breadth. Stay tuned as we dig deeper into the drivers behind these dramatic swings. Hello everyone, and welcome back to Investocracy.
Tom, great to see you. Long time no speak. First and foremost, what's your reaction to how the market is processed NVIDIA's numbers? It, of course, fell initially in the pre-market. Yesterday morning, it was doing all right, and then it did close more meaningfully down by the end of the session yesterday.
Well, I think NVIDIA is one of these stocks that has become part of like a stock market lore. Almost everyone has a position, and I don't think the results and the earnings changed anyone's minds about AI and the central role it's playing in both global productivity, but also NVIDIA's role. But I think the sell-off tells you that a lot of good news was priced in. I think that's why the stock fell. It didn't take the broader market down. I think that was kind of a positive outcome, and I think it just shows you that there's room for a lot of rotation, and I think that it's revealing that small caps is one of the groups benefiting from that rotation.
Let's talk about that rotation, Tom, and the extent to which there's still a long way to go if you're looking at the valuations of some of those sectors that haven't done so well in recent months and years, or whether things have bounced enough across the board that you start to get a little bit concerned about valuations for the entire market, not just the NVIDIAs of this world.
Yeah, valuations are definitely something our clients are asking us about because, the equity markets have been rising for several years. But the idea of a rotation, I think, is grounded on a couple of things. One is that the Fed's rate path is lower, and that benefits cyclical stocks and small caps. And we know there's also a lot of cash on the sidelines, and investors de-risked because of, the yen crisis and just general concerns about the summer.
Major U.S. indices experienced notable declines on Thursday, with the Dow Jones Industrial Average falling 0.4% to 40,712.78, the S&P 500 dropping 0.9% to 5,570.64, and the Nasdaq slipping 1.7% to 17,619.35. Among the stocks capturing the attention of retail traders and investors, NVIDIA Corporation, Trump Media and Technology Group Corp, Faraday Future Intelligent Electric Inc., CAVA Group Inc., and Tesla Inc. Each had newsworthy performances. These companies, key players in their respective industries, are driving significant conversations amid their unique developments. The dramatic moves in these stocks present potential opportunities for investors, especially as the market broadens beyond the traditional major players. Let's delve into the key events and figures that defined the trading day. But before we go through it, if you want to keep up with NVIDIA's latest updates and keep up with the stock market's latest news, you can follow our Twitter account. We post multiple times daily about the biggest changes and catalysts in the market, so click the follow button if you don't want to miss the newest market updates. Now, back to today's video, where we reveal the star of this week.
That was Craig Johnson, Piper Sandler Chief Market Technician. Craig, good morning.
Good morning. Thanks for having me on.
You know, Craig, I guess we're showing the chart here, the S&P 500, along with, what is that, the 200-day average, and we had the correction that culminated a few weeks ago. I guess big picture, if you don't want to overthink it, you say, well, it's an uptrend. It's been an uptrend. It didn't really violate anything on the downside. We've had a rotation of leadership, and maybe the market's broadened out. What's not to like with the Fed going to cut rates? Is there anything that you would bring up to say that we should be, I guess, overthinking it beyond that?
You know, Michael, as you look at this market, you don't want to overthink this market. But there is something we do need to take into consideration is the makeup of this market. We need to be thinking about large cap versus small cap versus mid cap in this market right now. And you come back and you look at what NVIDIA did last night. Amazing results on the fundamental side. But Michael, as you know, stocks are made up of two things. You got your fundamentals and you got your technicals, two parts of it. And right now you come back and you look at a lot of these Mag 7 stocks, they're not making the same new highs like we've seen before. You can actually find some better looking stocks in this mid cap world that look a lot more constructive. And I think that's sort of the change that's happening. This is a market that's broadening out. It doesn't have to be led by just the Mag 7.
The star of the show this week has undeniably been NVIDIA Corporation, NVDA. Despite a fall of 3.70% to close at $123.74, NVIDIA's collaboration with Taiwanese rail kit supplier Nanjuen International Co. for its GB200 artificial intelligence servers marks a significant entry into NVIDIA's supply chain. This partnership underscores NVIDIA's leadership position in the AI sector, as it continues to innovate with its Blackwell processors. According to the Wall Street Journal, these processors are nearly double the size of their predecessors, packing 2.6 times more transistors. Craig Johnson, chief market technician at Piper Sandler, highlighted on CNBC's Squawk Box that the market is broadening its horizons. Johnson underscored the impressive quarterly earnings results from NVIDIA, stressing that we should not overanalyze but understand the market's evolving composition. He points out that you can find strong investment opportunities in the mid-cap world too, suggesting a shift away from the usual Magnificent Seven stocks like NVIDIA and Tesla. And speaking of Tesla, TSLA, the company's shares fell by 5.65% to close at $210.66. Despite the drop, Tesla's ongoing developments, including tackling industry-specific issues and the delays in the rollout of full self-driving technology for the Cybertruck, keep it in the headlines. A quirky quip among market enthusiasts goes, investing in Tesla is like riding one of its roller coaster test drives. Thrilling, but not for the faint-hearted. But that's not all of it, so let's keep rolling.
If it broadens out, and this has been, I think, something that so many have been pining for so long, it makes stock picking easier. People are not comfortable being hyper-concentrated in a few names. But can the broader indexes manage to hold up if you do actually have that transfer? If I think back to the early 2000s when you had a similarly concentrated market that did broaden out, well, it broadened out in the context of the S&P 500 going down by almost half over the course of a couple of years, even as small caps outperformed.
I think you absolutely can see this happen. Again, I understand the math of the Mag 7, how large they are in terms of the market caps. But what if we just see these companies just sort of consolidate sideways? Why do they have to go down? I mean, they're great companies. They just need a break, take a breather, and then below the surface, we can find some of these things like Semtech and some of these other good-looking semiconductor companies pick up the performance that are making new highs right now.
And within, let's say, smaller stocks or just outside the Magnificent Seven, are we talking about defensive areas? You're talking about economically cyclical? Because there has been a little bit of a tone shift in the last few weeks.
You know, Michael, with the Fed looking to cut, which seems like a certainty at this point in time, we do know from going back in history that financials should definitely outperform. And if we go through and start looking at some of the regional banks, or you start looking at companies such as CBOE or ICE or some of these others, they all look pretty constructive. They all look like they're setting themselves up to take another leg higher. And that's part of the broadening process that we could see. So it can be those interest-sensitive names. It can be some of the mid-cap techs. And certainly we could also see some of the industrials with a reshoring trade continuing to play out.
In contrast, Faraday Future Intelligent Electric Inc., FFIE, saw an astonishing rise of 123.96% to close at $8.04. The stock has been trending across social media platforms like StockTwits and Yahoo Finance. This surge comes despite an NTSB investigation into a Tesla semi-crash, showing the unpredictable nature of the market and the power of social media in affecting stock prices. Meanwhile, Trump Media and Technology Group Corp experienced a volatile day with a 6.20% drop to close at $22.70. The stock's volatility is tied closely to the political landscape, particularly with the momentum of the 2024 presidential campaign. It serves as a reminder of how external factors can dramatically influence stock performance. Lastly, CAVA Group Inc. had a milder day, with shares slightly falling by 0.87% to close at $101.98. Post-earnings reports revealed a 7% beat against the analyst consensus estimate, showing a 35.05% increase from the same period last year. Despite the slight decline, the strong earnings performance suggests robust underlying business health. But before going through it, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
What do you think of OpenAI? Do you trust Sam Altman?
Not a bit. You know, I saw the prior segment where you were talking about NVIDIA. And to me, NVIDIA, the company, it deserves to be in whatever Hall of Fame we have for the technology industry. Because, you know, you're talking about a company that's business is primarily hardware. They have a ton of software now, but it's primarily hardware, and they've gotten themselves to 75% gross margins on the back of generative AI and a whole bunch of other really important trends in Silicon Valley. And I like to distinguish, as you know, David, between stocks and companies. Because right now, the issue that NVIDIA faces, which I think is going to be the issue faced by everyone in generative AI, is that the promise of AI has gotten way out in front of the results. And as Deirdre just pointed out, you know, Sam Altman would like to raise money at a $100 billion valuation off of $3 to $4 billion worth of revenue. And that may be fine. Investors may be totally comfortable with that. But that somebody somewhere along the way needs to ask the question of how long do we wait for enterprise applications to show productivity and value to customers? Because at the moment, Copilot seems to have some difficulties in that regard. I think there's a big promise at companies like Salesforce that they still have to deliver. And there are a lot of questions. And from an investor point of view, I think caution is increasingly going to be the watchword here, because it doesn't matter how good the chips are at NVIDIA. If you're talking about replacing $1 trillion worth of cloud services compute over the next few years, I mean, the S&P 500, the companies are mostly run by finance people. I mean, the chances they're going to write off $1 trillion worth of capital investment just so they can buy NVIDIA's new chips, I think that may be wishful thinking.
Looking ahead, NVIDIA offers a compelling case for investment. Analysts have re-rated the company positively following its second quarter earnings beat, with significant optimism for its future. Wedbush analyst Matt Bryson reiterated an outperform rating, setting a price target of $138. NVIDIA's projected third-quarter revenues of $32.5 billion and robust data center performance support this outlook. Rosenblatt analyst Hans Mosesmann remains bullish on NVIDIA, with a price target of $200. He noted NVIDIA's strong earnings beat driven by generative AI and networking momentum, despite slightly lower gross margins due to Blackwell's startup ramp. His analysis underscores the company's GPU roadmap is driven by accelerated computing and the potential of generative AI. With third-quarter revenue and EPS projections of $32.5 billion and 73 cents, and significant AI-driven infrastructure growth, NVIDIA is posited for strong future performance. The stock's temporary dip appears to be a buying opportunity, given the company's leadership position in AI development and substantial growth potential. As we wrap up, the current position of NVIDIA sits at a crossroads of innovation and market evolution. Investors willing to ride the wave of technological advancements may find NVIDIA a fitting choice for their portfolios. What are your thoughts on this dynamic market landscape and NVIDIA's potential? And finally, if you would like to know what companies like NVIDIA have been up to these past few days, go ahead and click on the next video on your screen. See you there.